Hey everybody, Jesse here from The Best Interest. If you're a regular podcast listener here, this one's going to be a little different. Every Sunday night, a group of 7 of us financial educators are hopping onto Twitter Spaces, which is a new feature on Twitter that allows audio chat rooms. Each week, we're going to be tackling a different topic, drawing on our various experiences and knowledge sets. We're calling this show Up and to the Right, the direction of growth, be it personal or financial. We're recording these sessions, and I'll be posting them here on the Best Interest podcast feed. Thanks all for listening. We had a really fun chat with some really good knowledge, and I hope you come check us out next Sunday night on Twitter. And as always, an investment in knowledge pays the best interest. So hello everybody, and welcome to Up and to the Right, a weekly Twitter Spaces where we discuss investing, personal finance, and really any idea that helps us better understand the world of money. Today we are going to be talking about Bitcoin, but before we go into that, let's take a few seconds to introduce our speakers, and we'll start with a couple of the main speakers today. So let's go with Andy. Why don't you introduce yourself, Andy?
Hello, everybody. My name's Andy. I talk about investing, money, and crypto, and making money online here on Twitter and on my YouTube channel.
Thanks, Andy. Dave, why don't you say hello?
Hi, my name's David. Other one knows my handle here is Uncommon Yield. And I try to bring a different perspective to money, trying to look at different ways that you can leverage your money, ways that you can maybe take some asymmetric risk too. So if you want to just find somebody that's going to tell you just to invest in index funds and don't worry about anything else and pay down your debt, I'm not your guy. But if you want to look at things maybe a little bit differently, why don't you follow me, follow all the guys here, maybe we'll learn something together.
Excellent. Thank you, Dave. And now I'm just going to go in order across the screen. We got Roger. Why don't you say hello?
Hi, everybody. I'm Roger. My handle here is at Upshot Wealth. A little about me. I basically, at age of 35, built $1 million net worth, all working a 9 to 5. So it's possible. And my focus on Twitter is really showing people like how they can build their net worth and like how to maximize things like 401k if you have access to them, and just talking money strategies.
Perfect. Thank you, Roger. Adam, how you doing, Adam?
I'm doing well. So, yeah, I'm Adam here. Basically, I started doing Twitter, documenting our debt journey, paid off a little over 31 grand, and now just kind of showing on Twitter some of our financial moves and some things to maximize your money.
Excellent. Thank you, Adam. Brandon, how you doing, man?
Hey, I'm doing great. My name is Brandon. I write a blog called Rinky Do Finance. I'm all about, building wealth in a simple way. So if you do want somebody to tell you to just buy index funds, I'm the guy. That's my stick. I'm all about building wealth simply.
Excellent. Thank you, Brandon. And last, we're going to pass it over to Shadow.
Hey guys, at Shadow Rents on Twitter. I'm the guy in a group that believes in buying real assets, not fake ones, such as real estate. I've developed a portfolio of over 1.2 million in the last 5 years and about 22 units. So real estate's my space.
Thank you, Shadow. My name is Jesse at Best Interest JC. I run The Best Interest, which is a blog, a podcast, and a newsletter for financial advisors who want to save time and get a hold of their clients. Speaking of real assets, I am fully invested in Beanie Babies. But today we're not talking about Beanie Babies. We are talking about Bitcoin. And we're going to talk pros and cons of Bitcoin. You're going to hear some bull arguments. You're going to hear some bear questions and hear the bulls defend themselves. And I think we are going to start tonight with Andy, giving us some overview of his views on Bitcoin, why he got involved with it, where he sees it going in the future, and really just, from an expert's point of view, the whole Bitcoin protocol argument. So Andy, without any further ado, do you want to take the mic?
Would be happy to. And I love this early shade being thrown out. Thank you for that. Love it. Sign me up. So I'll give you a quick, like high level overview of Bitcoin. I'll touch on just a couple of quick points that I think are significant, and then see wherever else I end up. I'll try to keep it short and concise, and then we can kind of roll into the rest of this. So for those who are in the dark, what is Bitcoin? Bitcoin is a decentralized digital currency. It is the biggest one by market cap and network, the network size, and all that good stuff. It was launched in January of 2009 by a person or a group of people that are unknown under the pseudonym Satoshi Nakamoto. Unlike fiat currency, Bitcoin is created. It's distributed, it's traded, it's stored on a decentralized ledger system, which we call a blockchain. A blockchain is basically, the way I like to think about it is when you have your money in a bank account at Chase Bank or Wells Fargo, or take your pick. You put money in that account, you have an account number, and they have basically a spreadsheet, and they have your name, and next to it they have how much you have in your account. When you take money out, they change that. They are the central authority on telling you how much money you have in your account. They hold the keys to that. Well, Bitcoin, in much the same way, there is a spreadsheet, a ledger. It is a public one. And so you have your account, you have your Bitcoin address that has your Bitcoin on it, and the world knows how much you have. And more so, the world at large who are on the network are the ones who maintain that. So when you send Bitcoin to somebody else or receive it, that transaction is broadcast across the entire network, across the globe. And if all the people on the network, all the miners, the nodes, the people using it, recognize that as a legitimate transaction, then they record that for all the world to see on the public ledger that you have either more or less Bitcoin than when you started. And that is one of the beauties of Bitcoin. It is completely decentralized and I believe largely uncontrollable. Another beautiful feature of Bitcoin built into the code is that it is a zero terminal velocity inflation rate currency, meaning the US government prints money, they make new money every year, they decide on how much that's going to be. You know, there seems to be no rhyme or reason to how that works sometimes. And Bitcoin is not like that at all. Bitcoin is programmatic money. It's a programmatic currency, meaning it has zero terminal velocity on that inflation rate. It is known. The inflation rate for the next 100 years is mapped out with mathematics in the code, and it is defined by the network at large, protecting that by mathematical equations. So it is very easy to predict how much there's going to be and all that good stuff. And so on that note, there are currently about a little over 18 million Bitcoin in circulation, with a maximum capacity on the entire network of 21 million Bitcoin to ever exist. And I think that these numbers are some of the most significant because when you have a finite asset like this, if there is demand for it, well, then there's only so much to go around. For example, there are currently 46 million millionaires in the world, and there will only ever be 21 million Bitcoin. If you take all the people in the globe and you take the amount of Bitcoin that there will ever be and you spread it out across the globe, there can only 1% of all the world's population can only own like 0.21 Bitcoin or something like that. It's a crazy small amount of currency, of asset for how many people there are on the planet, which is one of the biggest reasons why I'm so bullish on it. But also because it solves so many problems with our current currencies, current savings vehicles. It's, in my opinion, very reliable, has a massive amount of network effect behind it, has an incredible amount, maybe even arguably the most amount of computational power on the planet behind it. And that all that rolled into the momentum that it's been gaining during this bull cycle with institutional interest, retail interest, coverage across the spectrum, I think there is a lot of massive, massive upside with very minimal downside to it, which is why I tell everybody that if you are serious about investing, you're serious about growing your money, and you do not have a little bit, even 1% exposure to Bitcoin, you are crazy. So there you go. That is the basic overview. I'm sure I missed a lot of stuff, but that is what I'll cover for the opening.
Thank you, Andy. Sorry, I struggle over here. I'm still on an iPhone that's like 10 years old, so sometimes I can't turn my microphone back on. Well, thank you for that overview, though, Andy. That's very comprehensive. To the people in the crowd, if you have questions throughout, feel free to DM me, bestinterest_JC. And we are going to hear some questions from our panel, some bearish questions directed towards Andy. But I think before we get to those, I did want to hand the microphone over to Uncommon Yield, Dave. I mean, do you have anything, Dave, that you want to add? Because I know you're fairly bullish on Bitcoin. Do you want to add anything to Andy's argument, Andy's statements?
No, I mean, I think Andy really gave a really comprehensive overview that was really well said. Just to dive a little bit more into though where Bitcoin is going and who's buying Bitcoin right now. I mean, we even see really old conservative insurance companies, Mass Mutual. They bought $100 million worth of Bitcoin back in the fall. You know that, and now for them, that's probably less than 1% of their portfolio. But I think you need to ask yourself if Mass Mutual, who's a really conservative insurance company, if they are dipping their toe into Bitcoin, why? You know, like why would a company like that do that when 60% of their portfolio is in bonds and other super safe investments? Like what's the reason for it? And I think it's because of what Andy said. There is a limited supply, and those that hold some Bitcoin, it might be a really big deal. So that would be the one thing I would add.
Well, thanks, Dave. Yeah, that does make sense. That does make sense. And before I don't want to give away my 2 cents too quickly, but Brandon, I think I'm going to hand the mic over to you because I know you had some questions for these guys, some bearish questions. Do you want to ask away?
Yeah, so my first thought would be, you know, I think so when to give some background, I was really, really bullish on Bitcoin, 4 years ago. I was investing heavily in it. And what sort of changed my mind was that I reached a place where I was like, well, let's think about this as a currency. Number one, deflationary currencies are not necessarily the best thing, because if everybody thinks that what they have is going to be worth more tomorrow, why are they going to spend that asset? Why are they going to buy things? And then buying things is what really drives the economy, right? Like, people buying cars, people buying goods and services. So a deflationary asset, I think that aspect of it, from the standpoint of Bitcoin being a replacement for currency, I think that's a bit overrated, and people kind of see that and you know immediately assume it's a good thing. I think there are issues with that. Now, I know people conversely will say, okay, well, Bitcoin is actually a store of value. It's a replacement for gold. And there just seems to be a disconnect as to what exactly people are expecting. Is it going to replace the US dollar, or is it digital gold? Because I don't think it's a viable replacement for the US dollar at all.
Any thoughts there from the Bulls?
Yeah, so I can touch on a little bit of that. So I mean, there's a couple of thoughts and kind of beliefs behind where Bitcoin is going, and I think it is not um, a kind of singular viewpoint. So Bitcoin at its core, the base layer of Bitcoin, I think there is a lot to be said and a lot of argument there that I can go into about how that can definitely be a digital gold, a gold replacement. It basically, in my opinion, solves all the problems of gold and improves upon them, with the one downside of it's not shiny and you can't use it in electronics. But everything else, I think it far and away exceeds where gold fails. But then on top of that, what is currently still, I mean, this is all very early in development in the big scheme of things. I mean, the internet uh, was, invented and first started in the 70s or late 60s. And, we're just now where we are with it. So 12-year-old currency where Bitcoin currently is still very early. But even earlier than Bitcoin in development is layer two technologies like Lightning, for example, which that would be more so an appropriate layer, an appropriate technology stack for day-to-day currency for use in that. So I think there's different use cases for Bitcoin, and a lot of this comes down to it needs to get even more momentum. It needs to grow in size. Nobody is going to want to spend their Bitcoin on coffee when it's 30,000 one day and it's 60 the next and it's 40 the week after that. But at some point through these cycles, there is going to be, in my opinion, there's going to be stability. Is going to reach some kind of critical mass. It's going to reach some level of mass adoption. My view is probably going to become the premier, if not one of the premier world reserve currencies. And and then on top of that, there's going to be all these layers where people don't even know that they're necessarily using Bitcoin for the transactions. It's just going to be the back end of all that good stuff. And so, at that point, spending it'll be just like spending just about anything else. And a lot of it will be invisible. But yeah, so anyways, that's a lot of thoughts. Maybe David has a few as well.
Yeah, I think the one point, Brandon, you brought up it being a deflationary currency, and that's not a good thing. Well, I mean, I think we have to go back in history when we didn't have fiat currency, and what did that look like? Did people not lend or borrow then? I think so. This is where like my Austrian view of economics comes out. When you have really cheap money, what happens is people take really outsized risks. When people take really outsized risks, you get stuff like the 2008 financial crisis, right? So when you have a currency that is hard money that you can't inflate, you can't just print more. When you lend in a way that makes sense and where you don't take outside risk as a creditor. So that would be my response. I mean, we had people that lent money and did all kinds of normal financial transactions in the economy before that. Fiat money can definitely supercharge an economy, but it can also supercharge it to the downside too. So I think that would be my comment. Is I don't think that necessarily makes it economically unviable.
I follow. I follow what you're saying, and a couple points that Andy touched on. I do want to come back to them. The 2 points are mass adoption, and then also the possibility in the future of having a system in place where people are unaware that they're spending Bitcoin because some sort of interface that they're using in front of them basically puts Bitcoin in the background. And I kind of relate that to the current credit card system. So I want to come back to those two ideas, but we did have, I believe, a request for the microphone come in from Bunk Freeman. So I think Roger's going to hand the mic to Bunk Freeman. Bunk, just so you know, we're quick to cut people off if they go down rabbit holes. So feel free to ask your question. And other folks, feel free to request the mic. Feel free to DM questions if you have them. Bunk, I think you're going to be set up with the mic here in a couple seconds.
I don't know if he left, actually. He might have just left right before.
Well, you know what? I think he lives up to his name. That is a bunch of bunk. That's that's fair. Well, let me ask you one question, Andy, because I mean, you did bring up the idea of math.
Wait, he's Jesse. Before we go, he's back.
Yep.
And he's got speaker privileges.
Oh, Mike.
Sorry about that, guys. Jumped out. Yeah, Brandon, wanted to respond to your comment about deflationary currency. I think uncommon yield hit on it well. But at the end of the day, fiat currency is a relatively new phenomenon. This is something that didn't go into full effect since 1971. And if we look back through history, if we look at the gold standard, the Belle Epoque, so to speak, from 1871 to 1913, that was a mere and most deflationary environment ever. And more 0 to 1 creations happened during that time than any other. And the reason, and you got to ask yourself why that is. The why that is because people have a lower time preference. It's not a growth at all cost system, and people are able to actually create and to innovate. Under a deflationary mindset, under a deflationary environment, we will be in a world where you're not on the hamster wheel, where you're not bound to the 9 to 5, where humans can actually tinker. And if you look back in the history of the world, the greatest art, the greatest inventions, the greatest music, they all came in a deflationary environment. And the why for that is because people had a low time preference. They didn't have to worry about their money devaluing. And I think that's something that needs to be taken into account. And we also got to remember, Keynesian economics is new. This started in literally 1971. And we're on a path right now where we're seeing global, I mean, it could be global disaster. So just my 2 cents.
Hey, hey, Bunk, real quick question. You mentioned something in there. You said a 0 to 1 growth something. What was that you mentioned?
So Peter Thiel often talks about 0 to 1 and 1 to many.
Gotcha. Okay.
The
Okay.
0 to 1 invention is the thing that occurs that spawns the 1 to many. Zero
Yeah.
to 1 is exponentially harder than 1 to many. And if you look back, for instance, the period of 1871 to 1913, there were more 0 to 1 inventions than at any time in history. And that was during the inflationary period.
Excellent. Thank you, Mike. And so that's Peter Thiel, founder of PayPal, along with Elon Musk, writer of the book 0 to 1. If you want to read more about Peter Thiel, right? Thank you for that, Mike. Appreciate that. Appreciate that insight. That was very wise. Very wise. Any of our speakers have any thoughts back at Mike before we go on to another question?
Sure, I'll put in my 2 cents. I mean, thinking about Bitcoin as a currency, I guess my biggest issue with Bitcoin is not saying that I don't believe in it. I have some belief that it could be the future. I think my difficulty and kind of goes with kind of what Brandon's thinking with regards to currency. I think for right now, I think the difficulty of even seeing it as a currency is its volatility. It's so volatile. And when you look at currency in general, I mean, going from one day to the next and something's dropping, your currency is going down 10% is at least not something we would expect, for example, from let's say the dollar, right? So I think that's the difficulty I have with regards to looking at it as a currency today. As a store of value, kind of makes more sense because you're kind of hoping that it does go up in the future. But we're also, I think like Andy says, we are in an early, Bitcoin's in its very early stages even today. So where that goes in the future is, time will tell. But those are kind of my 2 cents on it.
Yeah, and the whole price volatility thing, I know that is a stumbling block for a lot of people, but I honestly believe I think volatility is good at this stage. I think you need volatility for price discovery. I think there is a whole lot of price discovery still to happen with Bitcoin. I think that if there is any long-term conviction that you have about it, then that is something that's just going to have to be ridden out until it figures out where it exists in the marketplace, which I think is many, many times more in market cap than it currently covers. And so I guess that comes down to the part where, and which Roger, you've already said that you are a bit of a believer enough that you aren't unexposed to it, but it's just being exposed to that volatility now. You have all that upside, or it can be you can wait until a lot of that has subsided, until things stabilize, till it has reached those kind of areas that it needs to reach to achieve that. But then there's limited upside there, and that's when I do believe that once we get through those periods, that's when it becomes more of a store of value. Whereas I don't currently believe it's there yet. I believe it's going to be a future one, but is not currently one beyond being a great investment vehicle.
That's a good answer.
So
That's a good answer. Go
one
ahead. Go ahead, Brandon.
Yeah, one question to sort of build on the direction we're going. So for disclosure, if I had to sum up my view, I would say that in terms of cryptocurrencies as a whole, we're similar to the internet in the 90s, where there are a ton of companies and some will be huge in 20 years and some you won't even remember. So my question, and I'd be interested to hear what the bulls have to say, is why Bitcoin? Because I am more bullish on other cryptocurrencies like Ethereum, but I'm not completely sure why Bitcoin has to be, the big one.
I mean, my answer to this is always number one, network effect. No other currency has the network effect and momentum that Bitcoin does. And then if I couple that with the um, reality that it was, in my opinion, very fairly launched, which is a next to impossible thing to do now that the kind of the genie is out of the bottle, more or less. A lot of people talk about, in the 90s or late 2000 in the 2000s and stuff. Companies like AOL, these were big shining stars coming out of the .com and internet initial age, right? And they've lost all their luster since then. But I think this the argument of relating this to some of that period is it's inaccurate because these are all companies started by people, a lot of times publicly traded, and this is not an analog for Bitcoin at all. Bitcoin was anonymously created. No one knows who started it. It was launched into the world in the most fair way possible at the time, and it has since had organic growth, adoption, and development since then. And based on all those factors, that's why I believe it's going to win out. I think it has the greatest head start. I think it has some of the greatest technology. And I think any shortcomings that can be solved by other currencies can also be solved with Bitcoin in interesting ways without being overly complicated, without being muddled down by people who are known and able to control it.
Just to continue to piggyback off what Andy said, it's so big. I mean, it's just so much bigger than everything else in the space. I mean, Bitcoin dominance is, if usually it's over 50%. I think it's a little bit under that right now. If somebody correct me if I'm wrong, but it's so much bigger than the entire crypto space in general. You see companies, publicly traded companies, and like other companies, like I mentioned, Mass Mutual, like put it on their balance sheet, actually invest in it. But I'm really bullish on Ethereum too, but I don't think we're going to see any companies put Ethereum on their balance sheet anytime soon, just because there's not that guarantee of limited supply. I think EIP 1559, and as somebody, Stephen would probably bring that up. I know he's listening. Where that could be a big deflationary impact on Ethereum, but the Ethereum Foundation has said, like in the past, that they're going to do whatever they need to do to secure the network, and if that means inflating it, they're going to inflate it. So, and two, there's no since there's no central group. I mean, who are you gonna go extort for Bitcoin? There's nobody, right? It's the whole network. You could go extort the Ethereum network. You can go extort the Chainlink Foundation. There are places you could go for other cryptocurrencies. That's not the fact here. It's really, it's actually is decentralized. It is a decentralized finance compared to a lot of the other things that are out there. So that's where I think that's the main difference for me from an investment thesis.
And to jump on that with one more thought, talking about next competitors. Well, obviously, Ethereum is next on that list when you go to Coin Market Cap or something like that. It's the next biggest, but the fundamentals are completely different. Bitcoin has a set cap of 21 million. Ethereum has no cap. It's unlimited. And there are dynamics in that with it changing currently, moving to proof of stake whenever that finally happens. But ultimately, just the core level with many of these, the fundamentals, the basics of the that are engineered into it are fundamentally different. And I believe that Bitcoin has some of the strongest fundamentals amongst all the other reasons I mentioned for becoming those things in the future, like a world reserve currency, for example.
I follow you guys. I do follow you guys. I have a bear question in a little bit, but we do have some good questions from the crowd. Financial Freedom Page, I've got your question up on deck, but before we get to that, I think we wanted to hand the microphone over to Steven at My Wealth Money, who not only asked us a bunch of questions in text beforehand, but Steven, when we give you the microphone here, feel free to verbalize. How you doing, Steven? Let us know. What are your questions, man?
Hey guys, how you doing? Can you hear me?
Hey, yeah, yep, we can.
Awesome. Feel like I'm saying hi to you guys for the first time, but I've been tweeting and conversing with you guys so much over the last couple of weeks and stuff. It's been great. So, and just really appreciate the channel you guys got going here, and wish you all the best of luck with it, and I hope it grows and explodes. So just I think my first question I have is for Andy there. Just your take on the next 5 years, where you see it going. Um, I'm not looking for a price prediction. It's I would kind of almost think like a fool's game trying to predict where this thing's going to go in 5 years, but just kind of a bull case for you where you think it could go in the next 5 years, and then also on top of that, what those biggest risks would be that could happen, and would any of those make you want to dump your holdings that you have?
Hey, Steven. Good to finally chat with you.
Yeah, you
So, predictions. I mean, I think I tweeted today talking about this cycle. I don't think this cycle is over. I think this cycle, this bull cycle, still has some time to play out. I think honestly, what we're going to see over the next 5 to 10 years is just more and more of what we have already seen, and what we've seen a lot of this year, which is the institutional adoption. I think there's going to, I think especially, and I know you asked a question about him. I think what Michael Saylor did with his company, MicroStrategy, I think that's another one of those kind of watershed moments with Bitcoin. I think that is we're going to see more and more companies, institutions, funds, where it becomes crazy to not have it on the balance sheet in some regard. I personally think he's. I know you asked about him. I personally think that Michael Saylor uh, is a bit of a genius in that he was able to kind of see what he saw and make the bet he did. I also think it's incredibly unique the situation he is in, where he has so much control over his company, is able to do such a big bet. I mean, honestly, I was surprised to see something like that so early. But I think that that's I see a lot more of that, and that's going to spiral into price action and all kinds of interesting developments with it. As far as price goes, um, I think it is crazy as well to make any big price predictions. But I think this cycle, if we, it would be insane to me if we didn't see the six-figure mark finally happen. And then as far as risks go, I think one of the biggest risks right now with affecting price and things like that, and general adoption and general sentiment about Bitcoin is all the ESG stuff. I mean, and I don't think a lot of it's founded. The energy usage, its effects on the environment, things like that. I think a lot of it is unfounded. But I think that the perception of that, of the general public and big figures like Elon Musk, who I personally believe aren't necessarily trying to, do harm to Bitcoin by saying the things that they say online, but are just kind of publicly learning as they go. This is all new to a lot of people, and even if these people are super smart, they're still figuring things out kind of in real time like the rest of us. Um, so I think that perspective of it's bad for the environment. These things having adoption based on that, which I believe again a lot of it's unfounded. I can go into more detail about that, but that is definitely the news cycles love that stuff. It's an easy way to keep price down and keep people scared about it or thinking about it or thinking it's a bad thing, when all the upside and all the benefits to society and the world, not just financially but just for well-being, are kind of monumental. So, anyways, that's a few thoughts if David has any.
I would say my biggest concern is just regulatory risk. So you saw what happened in China. I don't know if anybody's not aware. They put a pretty heavy crackdown on the miners in China, the Bitcoin miners, and they took a lot of them out. So if the United States is the biggest Bitcoin market in the world, if the United States government, for whatever reason, decided to make Bitcoin illegal, we would see a major downturn in the price. I mean, I'm fairly confident. What I continue to hold still then, that would be a really difficult question. From a legal standpoint, would I want to do something legal? My preference would be no. So I don't know, but I think regulatory risk is extremely high. I think it's becomes less and less as more people in government and more organizations put it on the balance sheet, and it becomes more part of the economy. But we're a little bit at a tipping point where I think if a government wanted to take a hard run at really trying to put the hammer down on it, they could.
One thing I was going to add is that, like, not even about making it illegal, but like, for example, I could totally see them, for example, like taxing the hell out of it, right? In order to almost discourage it more than make it illegal is kind of what I could see happen.
Yeah, as far as I think there's a lot of merit to what David said. I think that there are some risks with the regulatory stuff. I personally don't believe that the U.S. would do that. I think that that would be pretty dramatic and pretty crazy. But even if they did, yeah, I agree. It would be bad in the short term for Bitcoin. I don't. I kind of believe, like the internet, that Bitcoin is inevitable. So I don't believe long term it will stop this thing from happening. You can't slow the train down, but I don't think you can stop it. Um, but yeah, no denying that if that were to happen, that would be pretty ugly for a little while.
I think another risk worth mentioning, it's maybe not a risk in the same sense as some of these other factors, but another risk worth mentioning as far as mass adoption would be if a security risk as far as, people's individual holdings. It's very easy to, send Bitcoin to the wrong address, or to, if you're not savvy, give up your private keys. And I think that's a risk that will hold a lot of people back from adopting it, at least in its current form, where, you're still very aware that you're using Bitcoin. Eventually, when that's not the case, obviously this won't be as big of an issue. But I think right now, a major issue is still that, it's finicky in a way that fiat money isn't.
One thing that Andy just mentioned was kind of thinking about the long term, looking out, projecting to the long term. And we did have a written question come in from Financial Freedom Page, who asked, "Are you guys invested into Bitcoin, and are you holding for the long term? I've been thinking about getting into it, and I'm curious all of your guys' thoughts. Thanks in advance." So, real quick, I can say that I'm invested about 1% of my total portfolio into the Osprey Bitcoin Fund, or Osprey Bitcoin Trust, which I can buy. It's a mutual fund that I can buy through Fidelity, and they hold nothing but Bitcoin. So that's my personal exposure. But let's go around the room. Adam, do you own any Bitcoin?
Yeah, I hold a small amount. It's probably about 2% of my portfolio right now, but I just been kind of consistently buying little chunks.
Gotcha. Okay. Shadow, how about you?
I own $20 worth of Bitcoin.
Gotcha. Are you holding it for the long term, or is it a short term bet?
It is going to the moon tomorrow, my friends.
Okay. We'll come back to you, Shadow.
No,
I know.
I literally got it for a joke with buddies. I have no belief in it. You guys know my thoughts on it, and we can discuss that later. But yeah,
We'll
just as a joke.
we'll come back around the horn to you, Shadow. I know you have a question pent up for us. Brandon, do you have any Bitcoin?
No, I'm slowly working to 1% of Ethereum, but I don't hold any Bitcoin right now.
Gotcha. Okay, Roger.
Yeah, I got about close to 1%. It's been pretty volatile, right? So kind of depending on what day you catch me, I'll have 1% of it.
Yeah. Same. I know what you're saying. Same here. And then Dave and Andy. I mean, I know you guys probably have a little more than us. If you don't mind sharing, I mean, how much Bitcoin do you guys have?
I'll just say my total crypto, because I have exposure to
Sure.
other stuff too. It's probably about 15% of my portfolio.
Okay. Andy.
And I'll be the crazy guy here. I'll be that guy. 35-ish% of our net worth is crypto, with 80% of that being Bitcoin. And if you hop on Twitter and read some of my threads and stuff, you'll see that our net worth is roughly 1.2 million. So you can do the math, figure out how much I have.
Yep. I mean, I will say this, Andy. A wise person once told me, if you have the conviction and you have the belief behind it, it's not so much crazy anymore because if things hit the fan, you're still going to have your belief in it. And having talked to you extensively on this topic and heard your thoughts, and I understand exactly where you're coming from, I don't find it crazy because I know if something hit the fan with the market like it kind of did in the last few weeks, you're still in it for the long haul. And I think that's really important for people listening in to understand is how Andy has done enough research to really believe and have strong conviction for the long run. And these price drops from 60K to 30K aren't really pushing him off his predetermined path over the next few decades. Is that fair to say, Andy?
Yeah, and I'll say two additional thoughts on that. One, I don't think I'm crazy. I'm very comfortable with my allocation, but I'm fine with being labeled that by a lot of people. Um, and two, and I know that David would also probably agree with me on this. Yeah, going from 60, our top of 64.5 or whatever it was, and going down to just under 30 recently. It honestly, it just does not phase me. And I think you if your stomach is churning when these moves happen because they are dramatic, then I always tell people that either you're overexposed and maybe you should reassess how much you have into it, or you just don't really understand what you bought. You bought something because everybody else was buying it, and so you really need to just learn more about it and understand what you own and why you would want to own it. And then the third thing is you probably need more time in the market. I've had significant Bitcoin exposure for the past 4 years, and in that time I've watched it go from $20,000 to the mid 3,000 range up to 65,000 recently, and so it's kind of all par for the course at this point. But yeah, that's just kind of how it goes.
Yeah, really well said, Andy. Really well said. A quick follow up question before we get to Shadow. The follow up question was, what was the ticker for the fund that I was using? So it's the Osprey Bitcoin Trust. It's OBTC, Oscar Bravo Tango Charlie, and that's through Fidelity. I'm not sure if it's offered on other platforms, but it's through Fidelity. But Shadow, why don't you ask a couple of your questions that you had pent up for us?
Yeah, so I had a question slide in my DM and I was unable to answer it myself, so I'm going to pass it to you pros. Someone mentioned that they remember, I think it was at Ross Ulrich's Silk Road, that a lot of times Bitcoin was mentioned there. So is there an anonymous factor associated with Bitcoin purchases or not?
So everything, so it's pseudo anonymous. Uh, you unless you disclose what your Bitcoin account is, your Bitcoin address, um, no one knows which one is associated with you or which one you own. However, all the Bitcoin movement on the network is completely public. So if you decided you were going to get yourself some illicit materials and you sent certain, a couple $100 or $1,000 or something over the network to pay for that, it is completely visible to everybody watching the network to see that $1,000 move. Now, again, they don't know who's sending it or where, stuff like that. But the way there's lots of kind of chain analysis companies out there, and they watch patterns and what people say publicly and what is disclosed in the accounts they have and things like that. And with enough sleuthing, you can figure out who owns what addresses and where the Bitcoin that they have is and things like that.
Also worth mentioning, I remember several years ago, you could buy Bitcoin semi-anonymously, like fairly anonymously, but there are a lot of know your customer procedures in place now. So whenever you convert your dollars to crypto, there probably will be a trace. And from there, if you were ever subpoenaed or something, or if the exchange would ever subpoenaed or something like that, it wouldn't be difficult to figure out from a legal standpoint, who owned which addresses.
Yeah. I think the bad guys are always going to be able to figure out, ways around stuff. That there is ways you can really protect yourself and get around stuff. It's possible out there, but I mean, let's be frankly honest. I mean, I think a lot of the the FUD that you'll hear out there is people use Bitcoin to buy illicit stuff, and they know about Silk Road and all that kind of stuff. And Andy laid out this pseudo anonymous, um, you know, uh, case really well, or like what that is. But lots of money dirty money gets funneled through the traditional financial system all the time. That's like 99% of all the bad money. So, I mean, I think it's just, I mean, does it happen on Bitcoin? Absolutely. But, big banks get popped all the time for doing bad stuff. And it's probably the bank that you use is probably gotten popped for doing it too. So it just, I just think I think that's where that kind of question ends up going, like logically. And I get it, but it's just really a poor realization of the whole financial picture and what's going on.
So, Andy, if you were buying a powdery substance, would you use cash or Bitcoin?
Depends on where I sourced either the cash or the Bitcoin. To what Brandon said, by the way, there are still places where you can buy Bitcoin privately, but they are not user friendly, and they are not, and you do pay fairly exorbitant fees, and you definitely pay above market rate to enjoy that privacy. And also, there are ways to privately send and receive Bitcoin, and that's a whole nother deep dig into something called CoinJoin. But there are ways to totally be off the grid with Bitcoin, but that all takes a lot more work, and that is definitely not becoming the mainstream.
Yeah, Shadow, real quick. I mean, I buy powdery stuff every week at the grocery store using a credit card. That's just me personally, but I know I don't know if that helps your question or not. We
Yeah, I
did.
was wanting to bake, so powdered sugar was definitely on the list. I appreciate that.
I don't know if they have credit cards down there, but that's what I use. It's just me. Adam, I know Adam had a question pent up for us. I want to pass the mic over to Adam, and then I think Amon. I know we've got you. We see a question coming in from you, and Steven, we see one from you as well. So Adam first, and we'll go from there.
So my question for Andy and Dave would be, where do you guys kind of see like companies accepting Bitcoin? Is it going to be something that kind of just gradually grows, or something that kind of is like we see a period where there's kind of an overnight shift type thing? I know Tesla was taking it for a little bit. I believe they aren't anymore, but my curiosity is just the currency usage, like somebody using that at a grocery store or something along those lines.
So I think we're still really early with the currency aspect of it. Um, I think that's gonna we still need a lot more kind of price discovery and more adoption with companies, institutions, and stuff like that before we get really into that. But I think that's going to be the technology that are built on top of Bitcoin, like the Lightning Network. And right now, there's some amazing companies like Strike is a great company if you want to look into. That's a payments company, and they're building uh, person to person payment network on top of Bitcoin using Lightning Network, and it's instantaneous. It's the model they're doing, I believe, is completely fee free, and it's pretty amazing. And I think that what we're going to see is, I don't think it's going to be overnight. I think it's going to be gradual. But once we see that kind of terminal velocity, critical mass kind of moment pushing Bitcoin over the top, and then little by little companies will start adopting it, accepting it as with payments. It's going to be through technologies like that, where there's going to be some app or some slick interface, and Bitcoin is going to be the back end, but you're largely unaware that you're using it to transact, to do that kind of person to person or company to company or purchase product transaction.
Yeah, I think we're still a ways away, and I think right now, I mean, it'll be really interesting to see what happens with El Salvador. They just made it legal tender down there. So what will that adoption look like down there? The government seems to be pretty bent on really trying to make it happen. So that's really interesting. There's like but I think right now too, like every time. So let's say you bought Bitcoin, and you're early, like Andy or some of the other people that are listening. You bought it around 3,000. Well, it's 30,000 now. If you spend that money, you're gonna have a taxable event at that point. So are you going to want to incur that, or are you going to use the money that you have in your account? So I think, to Andy's point, until this is like a really stable thing, it doesn't really make sense, and it's just, unless the laws continue to change, it could be an expensive way to transact just from a tax standpoint too.
So are you guys saying that you're going to see this end up 20 years from now just swiping like a credit card at the local grocery and walking out?
100%.
I've got a question about that, Andy. I really do. I hope we have time for it, but I do want to have our listeners have some questions first. The first one is a question in passing, and it made me laugh out loud. So this is from Clint. This is at Clint Robert M, who asked, "Why do only 3 of us in the chat have laser eyes?" So Finance 99, I see you, Clint, and then a Hipster Finance. You guys have laser eyes. The question is, Andy and Uncommon Yield, where are your laser eyes right now?
Laser eyes represent.
I
Love it.
think Andy's are covered up by his cool shades. So
Yeah, they're back there. You just can't
That's
see
fair.
it.
That's fair. That's fair. That's a great question. Roger, did we want to try to pass the microphone over to Aman for his question?
Yeah, let's do it.
And Aman, I'm sorry, if it's pronounced differently or Amen, please correct me.
Hey guys, my name is Aman Singh, and I have a channel called Crush the Wealth Gap. I wanted to ask a question, and this is kind of how I'm thinking about technology and kind of Bitcoin and the overall trend. And so I kind of want to not dive so much into like the details of things, and so I kind of shy away from tiny, small details like daily, minute by minute, those kind of things. I'm zooming to 5-year, 10-year, 20-year, 30-year time frames. So as a macro trend, technology is a huge trend that our species entirely would be moving in this century in technology. Like we will have better technology in 50 years, right? All of us would say that. Like anybody not saying that would probably be a doomsday person thinking have some kind of nuclear war and then we'll go back to sticks and stones. So there's ways of classifying certain civilizations by the amount of energy they're able to use, right? So there's a type of civilization that can use planetary energy to do whatever it needs to do. I believe the internet is one of those technologies is using energy from the world to provide all services all over the world. Internet native currency called Bitcoin has emerged, 1% or less ownership in the world right now. So when I thought about this a little bit, and I realized, and I thought Bitcoin was a joke from 2014, and when I kind of thought about this first, and I kind of said, okay, well, is this something that's going to be here for long term, right? And the
Amen.
mechanics. Yeah, go ahead.
No, I mean, I follow what you're saying, and you're making good points. I'm just, what's your question for us?
Oh, well, my question is, what the peoples think of Bitcoin in that manner, where it's something that is to be looked at as it's gone up, 50, 1,000% in the last 10 years or whatnot. Or is it that, or are you guys thinking about it that in those terms that this thing is going up and you should own a piece of it and maybe speculate in it? Or do you see it as a macro trend, like as if you're owning a piece of the internet back in 1990s? Because that's how I see it.
That is a great question. That is a great question. So do you see it as owning a piece of the future, essentially owning a piece of a big macro trend, a shift in society? Andy, how do you see it?
It's like buying Manhattan real estate in the 1800s.
Exactly. It's even bigger than that, apparently.
Yeah, I mean, I'm not personally that optimistic. Like I own 1% of my portfolio is in Bitcoin. I'm not necessarily that optimistic about it as you guys are, but I do see it as owning. I'm trying to think of a good analogy here, but it's like owning a rubber factory before cars, where it's like, okay, it's gonna be important. I'm not sure it's stitched into the fabric of the future in the way that maybe Aman and Andy think, but it's possible. It is possible. So I mean, I do enjoy hearing your guys' enthusiasm for it, and it certainly has rubbed off on me. What do some of other speakers think about owning Bitcoin right now?
So I used to have I like the vast majority of my portfolio used to be in Bitcoin when I was like 20. And I found that it was really fun to have a piece of this thing because there's a huge culture around it. I think there's something to be said, and I understand the desire to, be part of it, whether or not you really think it's going to be huge in 20 years. I think there's something to be said because I do think blockchain technology will be huge. And so there is something to be said for having a piece of that now and in its current iteration, I think, just from an enjoyment standpoint.
Yeah.
And I want to jump on that too. I think I hear a lot of people who will say basically what Brandon just said, which is big on blockchain technology, um, less so on Bitcoin. And I think blockchain is amazing technology, but I think it's probably incredibly overhyped, and doesn't have nearly the use case that everyone thinks it does. I think most of the use cases for many of the utility tokens and other cryptocurrencies out there would be better utilized not on a decentralized ledger, but on a centralized, well-built database. I think that aspect of it is wholly overrated. But I think Bitcoin as a currency, it is a perfect use of that technology, and given its current status, I think that it'll be one of the defining uses of that technology. And Jesse, you need more than a 1% allocation.
So, guys, I'd love to jump in here. So, as somebody who is completely bearish on the topic, I own over $1 million in real estate. We all know this, 22 doors. I own something I can touch. And if we're using Bitcoin as a currency, I don't see there being an argument to where you can compare them equally. But if we're talking about holding them in a portfolio like an investment or an asset, then you should be able to compare them. So, how can you sell to me, Andy, or anyone else, that owning an imaginary asset is as important or more important than owning real estate, which is also a finite asset?
So I'll briefly jump over to the bull side and say, like, well, then you could make the same argument for stocks, right? Like, and I know people who make that argument. They don't want to own stocks because they'd rather own real estate that they can touch.
But stock is owning a part of an actual company. So it's still a real asset there in the grand scheme of things.
Fair point. Yeah.
Yeah, but it's an imaginary piece of a real thing, and the real thing itself is a bunch of people making up ideas and selling it to the world. So it's just as made up, really. It's just got people behind it directly, working on it, where you can see their faces and stuff. Whereas Bitcoin has people working on it too. You just don't know who all of them are. But as far as the whole imaginary thing, whatever, I mean, it's like a website. It's out there. You can't touch it, but we see where the internet has gone. The world's going digital. We live in an international and internet society now, so that's only going to be exacerbated going forward. And also, when it comes to like the argument of having some exposure to it, I like to think about it like this: if you took 1% of your net worth, or even half a percent, but I mean, 1%, let's just use that, and bought some Bitcoin, what's your downside? It goes to zero in some hypothetical situation, and you lose 1% of your net worth to that. I mean, that can happen with market fluctuations on anything you own, but the upside is so immense. I mean, we're talking about if this thing eats the market caps of things like gold, well, then one Bitcoin is worth $500,000 per coin. The upside is immense, and it's so unbelievable, the upside, that I just can't ignore having some exposure to it. And I think anybody who is a reasonable investor and wants to grow their money, that upside to downside equation in your head has got to be very hard to ignore.
So if I'm hearing you, you're saying it as an asset, you would still recommend it no matter what, just as a coin flip in a small amount of your overall portfolio. Is that correct?
Oh, definitely. I mean, I can make arguments for everything beyond that, but yeah, just at its core, sure, definitely.
Appreciate it.
Yeah. Real quick, everybody. I mean, for people listening in, I think we can't thank you enough for joining us for this hour. And because we still have a few questions in the queue and this conversation has been so lively, we're going to stick around for a few more minutes because we're all enjoying it. I hope you're enjoying it too. If you are enjoying it, please feel free, please give us a follow, especially, Andy and Dave for leading this conversation. But as wise and Andy as Dave are about Bitcoin, the other folks here who have been speaking today have their own sets of knowledge that can improve and have improved my life, and I think can improve your lives too. So thank you for sticking around. We're going to be here for a few more minutes. Clint, I just saw your DM come in, Clint. To be honest with you, you're like fourth or fifth in line. I'm not sure we're going to get to you, so I might suggest feel free to reach out to Shadow directly. I think Shadow Clint had some ideas for you. Nyan, I think we're going to give you the microphone next, but before we do, we had a question that's been waiting in DMs for a while, and that question is, how can we use Bitcoin as a medium of exchange if governments, especially big governments, are not yet accepting it? So even if a poorer country, like say El Salvador, starts accepting it, will it really have a big effect until the bigger countries give Bitcoin the green light? Any thoughts on that macro question, Dave or Andy?
Sorry, mine cut out for a split second. Can you repeat the second, or I didn't hear the second half of that?
I'm sorry. So the question in short is, will Bitcoin have a long-term value until big countries start to adopt it? Really, I think what it means is until they accept it as a way of paying taxes.
Will it have more upside until then?
No, will it have a future until then? Can we depend on can a poorer country adopt Bitcoin, or does it have to wait until really a bigger country does, until the world economy does from a bigger country?
I mean, I think we're seeing that play out in real time right now. I think that this small country adoption is part of that kind of momentum shift. When some place like El Salvador says, "Hey, this is actually this is a currency. This we are recognizing it as such." Well, then a bunch of other countries then have to decide how they're going to interpret that. Um, and then, yeah, I mean, I think real momentum will come when some large countries decide to give it that same credibility. But no, I think it's inevitable either way.
Okay, thanks, Andy. Thanks, Andy. I followed that. Roger, do we want to hand the microphone over to Nyan? I apologize if I'm mispronouncing that name, Nyan. But
Yep, I just did. Yep.
Perfect.
Hey guys, can you
Hey,
hear me?
yes.
So I'm a big believer in crypto in general, and I'm an investor in Bitcoin and Ethereum. So my question is very straightforward. I just want to know how Andy or the Uncommon Yield, you guys decide if you have, let's say, 10, 20, $30,000 lying around on your checking account and you want to put it on Bitcoin. How do you decide like what price is good for buying?
Uh,
By the dip.
yeah, no, I just dollar cost average. I mean, there's a lot of really cool calculators out there. If you have a big chunk of money out there, it's really the market is so volatile. If you've followed it for any period of time, the price swings are massive. Um, just dollar cost average. I mean, that's the best buying strategy for really accumulating any asset that you want to buy. So don't buy the top. Don't try to buy the top or sell the top. Don't try to buy the bottom. Just get in a little bit over time.
Got it.
Hey,
And
Nyan. Hey,
hey,
good to hear from you, my friend.
mhm.
And actually, Jesse on his blog has a great blog post on Bitcoin buying, and based on that, I would say two things. One, just what David said, dollar cost averaging. That's what I do. And two, if you just have a big chunk of money, there's two ways to handle it. One, just go ahead and buy and just get in the market as soon as possible and just wait it out long term. That's going to be a positive over the long haul. Or two, If that gives you any worry, well, then just resort to answer number one, which is dollar cost average, and just sit that into the account. Span that out over the period of time which it'll last, and then just automatically buy based on that.
That makes sense. Thanks a lot, guys.
Yeah, thank you for the question. I just tweeted at you the article that Andy was speaking about. So give it a read and let me know if you have any questions on that. In short, dollar cost averaging over the history of Bitcoin has proven to be a better strategy than waiting for dips, because essentially Bitcoin has been running away from us. And sometimes you'll be waiting for a dip and the dip never really comes, or it comes too late and you would have been better off buying the entire time. Um, Roger, I think you had mentioned, Roger, we have another question from Steven. Is that right?
That's correct.
Hey,
Hey guys,
Steven.
quick question for David on Uncommon Yield. So I got this email from one of the exchanges, and they said, "Hey, they're a reputable one. Deposit your Bitcoin in here, and we'll give you a 7% yield over 90 days." And I know you're into this, the lending and the yield with crypto, whether it's Ethereum or Bitcoin or and such. So I'm curious the inner workings of how they can pay me back at 7% annual on Bitcoin, given deflationary currency and such a high yield when interest rates are so low right now. So just curious, is somebody paying them a higher percentage in Bitcoin,
Yeah, no, that's a
or
great
how are they
that's a great
raising and paying that money?
yeah, no, that's a great question, Stephen. So this is essentially what they're doing is you look at fully paid securities lending. That's essentially what they're doing, except that's what exchanges do um, in the stock market. So that's why so many exchanges can offer free, you know, free trades. Is they do fully paid security lending on the back end. You never see it. They lend out your stocks all the time, make money off of it, and you never see a penny. So if that's the case, I would encourage you to find an exchange that or a brokerage house, even for stocks that offer you that opportunity to let you participate in that yield. But they're doing the same thing. So companies like BlockFi or Celsius or Nexo, Lend, Voyager. There's a bunch of them. What they do is Bitcoin is a really thinly traded asset. So this is going to get kind of technical. So if you all aren't following, I apologize. This is going to be kind of like the quick and dirty since we're close on time. But the float is really small. So that's like the amount of um, Bitcoin that's getting traded on these exchanges. So if you're an exchange, if you're Coinbase or Binance or whatever, you need enough liquidity in those markets for folks to be able to buy and sell. If you don't have enough liquidity for folks to be able to buy and sell on your exchange, you're not going to be able to make money. One, and then two, they're going to get shut down. Like there's like the infamous like Coinbase outages that happen whenever Bitcoin's like really running or really crashing. It magically just shuts down, right? So these exchanges pay an exorbitantly high fee to places like BlockFi, like Genesis Capital is another really big one, to to be able to float enough Bitcoin to have liquidity in their exchanges. If you look at any of the DeFi protocols that are out there too, the yields are super high. I mean, there's like 20%, 80%, 100% in some of these liquidity pools. And like, I be very careful. They're super risky. But the reason why they're so high is because there's such a great demand for liquidity in that market. So one of the things that we're seeing happening in these lending markets is BlockFi just had their rates come out and they lowered, and that's because one, there's more and more people wanting to lend their Bitcoin. There's more competition coming out to lend Bitcoin to these big entities, and then three, like the price is going down, so people wanting to borrow, the volume is a lot less, so there's less demand. So that's kind of the quick and dirty answer. But if you search for fully paid securities lending, you can get a pretty good feel for what exactly like is happening from a mechanic standpoint.
Yeah, awesome. Yeah, you kind of read the worry or concern there, right? Where it's like it's really high yield and almost makes it kind of sound like a scam sort of thing. And I mean, so far so good. Everyone's tweeting and talking about the different high yields on USDT, et cetera, et cetera. We don't, you know what I'm talking about. So I'm just, somebody has to pay the bill, and I'm just concerned, just counterparty risk on that, and just somebody's like, oh, I can't make the payment. Not enough got mined or whatever. I can't pay that, and then just contagion hits, and the whole thing starts to escalate and domino, and that sort of thing. And then, so yeah, just thanks.
Yeah, I'll try to post a few podcasts after this that kind of go through some of at least the business model for BlockFi. Like I've used them a lot in the past, and I dove down pretty deep. So it'll help make a little bit more sense. I definitely understand how the people can be reticent, in saying the yields that are so high, but they do make sense when you kind of start to understand the market. You understand how thinly traded it is, and you kind of pair that with like fully paid securities lending that is like a normal market making activity that happens all the time in the stock market.
David, would you say that those services, that the yield that they pay is an uncommon yield?
It is 100% an uncommon yield, Andy.
Andy, we're gonna kick you off. Get out. Get out, Andy.
I accept this.
um, Dave, I'd certainly be interested in hearing you talk about the business model of BlockFi because it's a great question, Stephen. I've had the same questions, almost like where are these yields coming from exactly? And when I don't have the answer, because I don't have a good answer and I haven't committed the time to finding the answer, part of my brain says, boy, it sure sounds like a pyramid scheme. So I would love to hear your thoughts and on explaining why it's not that. I would certainly benefit from that.
Yeah, I mean, maybe we can cue that up for a podcast in the future, and you guys could pepper me with questions and figure out what I don't know. I think that'd be fun.
Very cool. Very cool. I mean, let me plant this flag in the ground. Like I still have a few questions lined up, but it's gonna take us till like 11:30 my time to get there. So I almost feel like we should save them for another round. But I want to go around the room. I mean, any questions right now while we're still going from anybody else on the speaker microphone?
If I could, I want to know, Andy, do you think your experience with Pirate, you know what I'm talking about, the crash in the crypto winter, do you think there's a possibility of that happening again?
So two things there. You said you were asking about Pirate again, and you're asking.
More just like, well, I find your story with Pirate very unique, inspiring, and really keen business sense on that. I know it's a separate topic, maybe for a different session and stuff, but I think there's a lot of principles and a lot to learn with what you did there with that. But just, I guess, do you see? I know you mentioned earlier bull run. We're not out of this, but do you see any kind of sharp downturn in the medium term in order to get there eventually?
So in the near term, no. I think we still. I think we're going to have a few more corrections, certainly. But no, nothing like what I don't think we're quite ready to go into another bear market. But I do believe, absolutely, yes, we're going to have another down market. I don't know if it's going to play out like the last one did or not. But I'm convinced we will see that again. It seems crypto seems to just love the cycle and hasn't given it up yet, at least at this stage of the game. And based on the last one, I think that if and when that happens again, there's going to be tons of wonderful opportunity if you have conviction, if you're able to, if you have if you have any money left over, if you're able to pick up some stuff at an extreme discount and wait out for the several years you have to wait until the next bull cycle after that. And the thing that Stephen is asking me about specifically is I did a thread on an altcoin called Pirate Chain, and essentially during the last crypto bear market, the crypto winter, it's one of the many plays that I made where I spent very minimal buying a mining an ASIC miner, a mining rig, to mine it because I saw potential in it. And so basically, I invested a little bit of money in this machine. I invested money every month for a few years in electricity, and I mined a big stack. And I spent maybe $1,200 on that investment. And at Pirate Chain's peak, that investment was worth like $150,000 to $185,000. I exited some of that position and held some of it, but that is one of many decisions I made during the last bear market with mining, investing in coins I saw potential in, all with the end result of just increasing my Bitcoin stack.
That's really cool, Andy. I think you're one of the few people who I know personally who runs a mining rig. I think it's really cool to hear about that because it really is almost like kind of like printing your own money. At least in my head, that's how I think of it.
Yes, I have a miniaturized Federal Reserve in my house. It's wonderful.
Decentralized reserve. And one little thing I wanted to add to Steven's question. I'm not sure if it 100% answers it, but I think it comes close. I own a lot of stocks, and I know in the back of my mind, I am very well prepared for the fact that stocks could drop 30 or 40 or 50% in the near term. It could happen. We saw them drop 35% last year, and I wasn't too bothered by it. I knew it might happen, and when it happened, I wasn't too bothered by it. With Bitcoin, that percentage might be 50 or 60 or 70%. And I think if someone has done their research and feels confident in the long run, like the way Andy does and like the way Dave does, and to be honest with you, like the way I do with my 1%, I'm not too bothered by the fact that it might drop 50% in a short time span because I'm holding for the long term. Now, I don't have the confidence to hold quite as big a percentage of my portfolio as Dave or Andy, but that mindset in the back of my mind about how much it could drop if things went poorly does help me maintain my faith for the long term, similarly to the way it does for stocks. Just my 2 cents.
Yeah, I think that's a
Should I
really good
drop the
point.
mic?
You brought that up earlier too, just the conviction and Shallow Rents has that with his rental properties. He's not going to deviate. You're not going to shake him off that. Just like Andy with Bitcoin, and I think that's a really important lesson. I think for all of us, right? Just to have that asset, have that conviction for a particular asset, and see it through. And I think you'll come out a winner at the end.
Right, right. I think that's the whole point around portfolio management and why for many people it makes sense to have a diverse portfolio because you say if a certain asset is so risky that its potential downside is going to turn me off, well that means you should have a smaller allocation of that asset. If Bitcoin turns you off with its downside, you should have a smaller allocation. If government bonds make you feel really good because you know there's very little downside, maybe you have a larger allocation than most. I know Dave is probably cringing, but at the end of the day, it's personal. It's a risk allocation mindset, and everyone's going to be a little different. And I commend Andy and Dave for understanding the math and understanding the way it could drop the volatility, and that drives them to say I'm accepting the risks, and in the long run it it should pay off. I really hope it does pay off for them. With that, I'm going to go around the room one more time for any final thoughts from our speakers. So Shadow, how you doing, man?
I'm good. I feel like I learned a lot. I appreciate Andy and Rogers and all of you guys' time for enlightening me on the subject. I'm still thinking that I'm not touching it. But you guys are crazy that I own properties that I can touch and hold and burn down if I want, and stuff I own's real. And you guys are crazy, but I appreciate your all's views.
Roger, how about you?
This has been great. I mean, I've learned a lot from you guys as well. For me, I'm kind of it's the volatility is big for me. I think that's why I hold smaller positions of it. I believe that there is a future, and I think you have to be kind of open minded, and that's why I do have a 1% allocation on it, and maybe that'll grow in the future. But for right now, that's pretty much what I'm comfortable with, just based on the volatility that it has.
Yep, makes sense. Adam, what are your thoughts?
I was just gonna kind of piggy what Andy said. I'm not a huge Bitcoin guy, but I obviously I still have a little bit of it. But I just think the risk to reward is kind of one of those things that you hold that 1 or 2% allocation of it, and play the long term game, and hopefully it ends out on the right side.
Right, right. Brandon, are you sticking the course with Ethereum for now?
Yeah, and I'm also disappointed nobody told me to have fun staying poor during this entire conversation. But no, it was a good conversation. I like that we were able to discuss both sides without anybody, going too nuts. I think everybody made very solid points, so I really enjoyed
Well, we're still going to be live for a couple minutes, so never say never, Brandon.
it. That's true.
Dave, why don't you go next?
You can have fun staying poor, Brandon. Let's go ahead and rip that Band-Aid off right now. But no, I think I would just take some time if you're interested in Bitcoin. Read the Bitcoin white paper. It's really not that long. Engage with people on Twitter. To Brandon's point, the Bitcoin community can be really brutal and not fun. There's a lot of people that are, and they've built up a lot of calluses, I think, over the years with people attacking it, and they just go ballistic when anybody has a question, even if it's a valid one. So just find the folks that want to talk about it. Like Andy and I talk about it, and we're not mean about it. So find the folks that are interested, want to teach you, want to learn, and aren't mean about it, and just do a little bit of your own research.
Thanks, Dave. I want to just give a big thanks to some faces in the crowd who I see who are familiar, and even more faces in the crowd who I see who I don't know yet. Thank you guys for calling in and listening to this for the past hour. It means a ton to us. But I want to give the last word to Andy. Andy, why don't you sign us off?
Yeah, thank you for everybody who has listened in, who stuck around, and if you've submitted questions or participated. I really appreciate it. We all really appreciate it. This is a ton of fun to talk about this stuff. It's obviously something some of us are very passionate about, so it's always exciting to chat with everyone. I will end with this. I think if there's anything in here that piqued your curiosity, if this got you, if this got the mind kind of running a little bit and thinking about Bitcoin, maybe you don't have an allocation, or maybe you have a very tiny one, and you're thinking about this whole, maybe I should allocate a small percentage of my portfolio. I just encourage you, there's so many resources out there, so many great podcasts, books, etc. I'm sure many of us are happy to chat with you too. Reach out and do the research for yourself. See if there's any personal conviction there that you find for yourself. And then I encourage you to give it a shot. I think what a lot of people are going to find is if they give 1% allocation in their portfolio to something like Bitcoin with such asymmetric potential upside, that in the upcoming years, they're going to see that 1% of their portfolio so far outperform the rest that they're going to wonder why they shouldn't have more of an allocation, 5%, 10%, or whatever. I think the potential there is incredible, and I'm excited to be a part of the ride, the journey, and the community, and excited to chat with everybody here. So thanks for taking the time to do so.
Excellent. Thank you, Andy. Thank you all. All right, everybody. I think that's it. Have a great night.
See you, fellas.
Cheers, guys. Thank you. Thank you, everybody.
Thank you.
See ya.
Have a great night, guys.
Some might cost a little, some might cost a lot, but I'm the $1 million man, and you will be bought.